So the autumn budget 2017 really brought some changes to tax-efficient investing, specifically in the EIS, SEIS, and of course the VCT space. As a result of this, you will have much better investments than you perhaps might have had before the budget. You're not going to be investing in a structured financial product. You're going to be investing in a pool of venture investments. The new investments, there are a couple of changes which people need to be aware of. Firstly, you're going to be investing with fund managers who have to go out and source those investments. And sourcing investments take a lot of time, it takes a lot of care, it takes a lot of due diligence, and therefore you don't have quite so much certainty about the timing of the investment. They will line up investments and they will know when things are going to close, but they won't necessarily invest all of your money at the same time. It may take a while to get into the market. So the other thing that the budget introduced, on the one hand there was the stick, so they removed the asset-backed investments and the capital preservation style investments. But on the other hand, there was a very juicy carrot. This carrot is in the form of a £20 billion stimulus. The reason it's relevant is because it's going to create more competition for the exits, and that more competition means better valuations and shorter timeframes. So what's interesting here is we've lost a risk-managed investment, and we're now entering into something which is a less certain style of investment. But the thing about investment in venture opportunities is that it's all about specific risk, not about systemic risk. And the great thing about specific risk is you really can manage it by diversification. Build a portfolio of 30 investments, and they should manage out that specific individual risk quite nicely. So what's happening in the market at the moment is that there is a huge portion of the product which used to be available to invest in, which isn't anymore, and there are far more investors who want to invest. So if you want to get invested in the current tax year, you need to act now. And remember, you can use carryback to have some or all of your investment treated as though it was made in the previous tax year.